everything trends to zero against Bitcoin except one particular thing. What do you think that is? Well, this is going to be the topic of today's video, where we're going to look at essentially the measurement and quantity of Bitcoin to purchase a house, stocks, fiat currency, and the mystery one over here. And basically, the reason why this is important is because right now everyone has their fiat goggles on, that you need to remove the dollar measuring stick from your mind, because right now the economy is a bunch of carpenters with a warped measuring stick blaming each other for bad design. And that's the most boiled way to understand all the societal problems of pointing the finger at everything and anyone. Maybe the measuring stick is broken. That might be the problem. And so what we can look at first is a little interesting insight to, there's a lot of people that made a good amount of money early on with Bitcoin. Let's say they spent, early on, they spent 1,000 Bitcoin or 100 Bitcoin on buying a property, a relatively normal property, and they're happy. A house purchase is a necessity. If you're raising a family and you want comfort and ownership, I mean, the ownership goes back to a government, so whether that's true ownership, who knows? And basically all these sorts of things where you buy a house for 1,000 Bitcoin from years ago, and then eventually they sell it and go, do you know what? The one thing I want to hold and benchmark my wealth in is a quantity of Bitcoin. So they sell it back into Bitcoin, and now they have only 10% of the original Bitcoin in quantity than what they had in the first place. And when you benchmark anything to Bitcoin, it just continually trends down over time. And this is because, well, Bitcoin is the best performing asset of the decade in reference to stocks. So if you compare any stock to Bitcoin, it's going down. If you compare any of the other alternative digital assets, they're all going down against Bitcoin. And even the top ones like Ethereum and XRP, and when I say top ones, the ones that are below Bitcoin, they still haven't made new all-time highs against Bitcoin. If you look at the Bitcoin to one of these others trading pair for several years. And so you get these little hopeful spikes, but I'm sorry, there's no fundamental value. And that's the key thing here. If you are new here, basically at the Hashpower Academy, we teach Bitcoin from the fundamentals first. That is going through the energy sector, the compute Bitcoin mining aspects, and how that produces Bitcoin blocks and issues that full supply of 21 million Bitcoin. And that fixed supply unit, that absolute scarcity of engineered money, essentially, a database of units with a cost to produce. These are the most fundamental things as to why Bitcoin is outperforming everyone else, because there is continually more energy needed in society. There's continually more computers, the difficulty adjustment and network hash rate continually increasing. So you've got this energy and compute expansion under a planetary scale information system that's decentralized all around the world. Yeah, that has true fundamental value, and that vertical integration and circular integration with the electrical grids is exactly what we need in society in the 21st century. Now, so what do you think is the one thing, and the one thing only, on a Bitcoin unit of account that outperforms Bitcoin, which is relevant to today and going into tomorrow? What do you think it is? Well, you can hold Bitcoin over time, and that is your ownership of a quantity of timeless monetary units, or you can accumulate Bitcoin in of itself as a yield. Hash power, Bitcoin mining is the one thing that can have the potential to outperform Bitcoin if you have efficiency. This is most important. Efficiency is the name of the game. And most importantly, even mining machines as the asset itself is trending to zero against Bitcoin. But Bitcoin miners are the only ones that can produce Bitcoin. So when you combine the asset with the yield, you have the potential to outperform Bitcoin over time. But you need to understand that mining is an accumulation, a yield production of Bitcoin. And over time, that does diminish. So this isn't a guarantee. You need efficiency and good access to power. And I do believe that in the future, the individual opportunity to mine Bitcoin is going to be at that local level where people vertically integrate their ability to produce their own power, run even old mining machines if they have no quote unquote running cost of power, if they've already purchased the upfront solar or wind or whatever it is. And those mining machines producing heat for their property locally, and that connection to the internet. Even if you want to live in the middle of nowhere off grid, I'm sure you want an internet connection, or not. It's all up to you. The whole point about Bitcoin is there's optionality and choice. You could just hold Bitcoin and do not participate in any of this. You could run your own nodes, store your own blocks. You want to be the determinator of your own destiny. You want some write access, that is to produce some compute, run a computer, and that computer creating heat to keep your house warm. And that final piece, to integrate all 6 pieces, is to produce your own energy. And when people are vertically integrated from energy, from watts to sats, so to speak, I believe that is the path where even if the economics of mining were to collapse, we're all able to produce our own energy, produce our own money, and trade and transact globally. And the best part of this is you could just remove the whole Bitcoin part entirely and go, oh, there's a solar storm, the magnetic poles have flipped. I don't care what crazy event that you apply at it. If you've got your own living space where you produce your own energy and can produce your own heat, and yes, you were connected to money, you remove the Bitcoin part and you're still self-sustaining, and you have access to goods, services, resources that you can trade with each other. Now, that's going a bit off the deep end, but basically Bitcoin mining is essentially that opportunity to accumulate a greater quantity of Bitcoin over time, and with efficiency you can outperform Bitcoin. That is the only true fundamental intrinsic source to outperform Bitcoin, that the participants that add value to the network, add more hash rate and energy into the system, those are going to be the people that are rewarded with the most Bitcoin. Because as we all trade and transact Bitcoin, we're paying fees, and those fees are being distributed to these people in the network. And so essentially Bitcoin over time is this continual redistribution system of, you want to trade and transact, that information has to be stored somewhere. We don't want one particular person with all the control of that data storage of our information money. And so it has to be distributed all around the world. And that's why Bitcoin has an energy cost to produce, because it forces the decentralization of Bitcoin. And so, yeah, the only thing that can outperform Bitcoin over time and has the potential to outperform it as a benchmark is to, well, add energy and compute to the network in an efficient way. Thank you for listening. I hope you enjoy. This might have been obvious to some people, but others might be like, oh, I thought you were going to tell me some random other asset. No, it's be efficient, be productive, and the network rewards you. That's it. That is the most timeless quote that you can take with you into life. If you want more Bitcoin, you need to add value to the network. Thank you for listening. Hope you enjoy. Goodbye.